Hi, welcome to Homebuying 101. I'm your host, Hope Stafford with the Hope Helps Group, and I am here with LeAnne Merciez from Universal Lending. We
Hello.
learn all about loans today. So let's start with what is the difference between a lender, a loan officer, and a broker?
All right, so a lender and a loan officer are pretty much the same thing. So when you have a lender and a broker, a lender funds everything in-house. So for example, Universal Lending is a correspondent lender. So what that means is we have our own money to fund a loan. So when you close a home, we fund that loan and then we sell it on the secondary market, where a broker does not fund in-house. They use a wholesale broker to fund their loans.
Okay, that's very helpful. Thank you. And what is the difference between an FHA, a VA, and a conventional loan?
So there's a few big differences. Down payment requirement, but they're all good loans. They're all going to be based on what each individual home buyer qualifies for. So it's going to be dependent on your credit score, your debt to income, and then how much you want to bring in. For example, a VA loan, if you are eligible, then you can bring in just your closing costs. So they offer 0% financing. For example, a conventional loan, we can go as low as 3% down. FHA, it's also a good program for our buyers with lower credit scores, and those are 3.5% down, and you pay what we call upfront mortgage insurance and then monthly mortgage insurance. So it's a government-backed loan.
Okay,
It's a loan for everyone.
And are there any special loans for first-time home buyers?
I wouldn't say special loans for first-time home buyers. There are a lot of different options out there. There's programs called Home Possible and Home Ready, and they're all based on different income limits, but those allow for a little bit better of a credit score and lower mortgage insurance. And there's also just different down payment assistance programs out there, and a lot of them you don't even need to be a first-time home buyer to qualify for.
That's good to know. And then what is a pre-approval letter and what's a pre-qualification letter?
So a pre-qualification letter is where we take an initial application and we run your credit. We ask you all of the questions to complete a full loan application, but we don't get any supporting documentation. So we don't get the pay stubs, your W-2s to verify everything on the loan application. A pre-approval letter, we require all the documentation to verify that you are really approved for the loan.
Okay, that's a big difference. And then lastly, what documents will you need to qualify someone?
So if you are W-2 or a salary employee, then we really just need your 2018, 2019 W-2s, or next year, 2019, 2020, or 2021. Just kidding. So we need 2 years of past W-2s, and then we need your most recent pay stubs. And then we'll also have to verify assets, so meaning bank statements.
Oh, okay.
Self-employed, it's a little bit different and a little bit more entailed, but we do require tax returns and some P&Ls.
What's a P&L?
So your profit and loss statements.
Okay, and can I just text you pictures of these things?
It depends. You can text me pictures of W-2s. You can text me pictures of your pay stubs as long as they're legible, but not tax returns. The biggest thing we want to make sure is that when you send it to me, you're providing me documentation that has your social security and date of birth. So I would prefer 100% that if you sent them to me securely, which is a link that we provide.
That makes total sense. Always protecting the buyers.
Yes.
Well, thank you so much for your time. And as always, if you're looking to buy a new home, contact me and then get your financing through LeAnne.
Thank you, Hope, for having me.